Hello and welcome to CMC Markets Trading Outlook for the week of October the 19th, 2015. My name is Colin Szynski, Chief Market Strategist. I'm going to go with a little bit different format this week. I'm going to focus on one market and a series of events, and then just do a couple of quick updates of other markets. The main topic I'm going to focus on this week is Canada, which has a big week for news underway. We start off with the Canadian federal election on Monday. We have the Bank of Canada on Wednesday, and major data announcements for Canada due throughout the week. So because of this, we could see CAD pairs be very active, and it's certainly an area in focus. This highlight of major announcements for Canada actually comes in a week when the U.S. goes very quiet. We have a few Fed speakers, a few housing announcements, but other than that, it's a pretty slow week for U.S. news. The U.S. takes a break, and then the following week, the week of the 26th, is a huge one with the big Fed meeting, GDP, and other figures. The around the world is also fairly quiet. We do get flash purchasing managers on Friday. We at the end of the week, to start the week though, we do get China data is in focus. We have a number of announcements, including China GDP, industrial production, retail sales. We'll finally get an idea of whether or not the big massive sell-off and all the worries about a meltdown in China were founded or not. The Chinese markets have been recovering heading into this report, so they could be volatile to start the week. But over the course of the whole week, it's still looking like a big focus on Canada and also on earnings. So I'm going to start with my discussion of Canada. As I said, we have the election is on Monday. The Bank of Canada is on Wednesday. On Thursday, we have Canada retail sales, and on Friday, we have Canada consumer prices. So it is a big week, and we could see the loonie trade actively throughout the week. I'm just going to highlight here what's been happening. This is CAD US dollars, so this means that Canadian dollar has been going down. Canadian dollar has been going steadily down for the last 2 years. In particular, had the big crash in late 24, early 2015, along with the oil price, and then had a second down leg here in middle over the last few months. But there have been signs of a turnaround. It dipped and had a bear trap just below the 75-cent level, has started to rebound. Over the course of 2015, we have had a positive divergence between the RSI and the pair. That suggests the downward momentum was slowing. And look at this, in more recent weeks, we've actually seen a breakout of a falling wedge, which also is a significant technical turn here. It's currently sitting just below 77.80, which is an initial resistance level, or 78, with the next one up here. This is the 200-day average near 79.10. Fibonacci level here, 3% retracement of the downtrend near 79.60, and the 80-cent round number where I think it could struggle. So how could the loonie react to the news of the week? Well, I think the big thing is with the federal election that it is looking as though at this point we're still in a fairly tight race, and it looks like we could be heading for a minority government situation, or a hung parliament as they call it in some countries. As of just before the weekend, the Liberals have taken the lead in the polls, but the Conservatives are still running fairly strongly as well, and the NDP has dropped off. The way markets usually react to it, stocks don't often react that much to elections unless it's a major change. We do see more impact potentially in currency markets, tend to react more to election results. In the case of Canada, as long as the general direction of policy and towards businesses and monetary policy doesn't change too much, we wouldn't expect the election to have a big impact on stocks. However, the results could impact the loonie in the short term. We could see a little bit of weakness if any uncertainty comes out. As I said, a majority government is looking unlikely, and it's possible that the Conservatives may lose power. The Liberals could win the election. However, they'll probably end up with a minority government, which also, again, means that they'll probably only be able to do so much as well. However, if they team up with the NDP, we could see a leftward shift a bit in Canadian policy. That could weigh in the markets a little bit, depending. A majority government surprise could have an impact on loonie trading, and But if we do get into a minority, I think we'll see more of a moderate to perhaps slightly downward impact on trading. However, I did want to note in general that although the election could have an impact, the crude oil price also continues to have a major impact on trading in CAD. And of course, it doesn't really matter who wins the federal election. That doesn't change world oil prices very much. The other thing to highlight here, so for the rest of the week, we have the Bank of Canada. Now, the Bank of Canada has cut interest rates twice this year already. Norges Bank had cut, and both cuts in Canada had been preceded by a Norges Bank cut. Now, Norges Bank cut again last month for their third time in this easing cycle. However, I don't think we're going to see the Bank of Canada follow suit and cut rates this week. The reason for that is, one, the crude oil price has stabilized. Two, Canadian employment and other numbers have been okay. They haven't been awful. But the most important one is the election itself. Because the Bank of Canada meeting comes 2 days after the election, and the possibility of coalition talks for minority government, the results may not be totally settled by Wednesday. Because of that, I think we'll see the Bank of Canada stay on hold. However, in their statement, they could give a signal towards whether they're looking at cutting in December or not. Their following meeting is on December the 2nd. So it is we could see we'll see if they give any kind of a signal as to whether they remain on hold or if they're looking at cutting again before the end of the year. The retail sales and consumer prices also could give an indication of how much pressure the Bank of Canada is under to actually cut rates again or not, or if the Canadian economy is starting to rebalance. We've, of course, in Canada, with the big oil price crash, has had a huge impact on the oil patch and on oil-related employment and activity, and certainly the Alberta economy. And this is not unusual in this kind of a situation where oil crashed, the loonie crashed, and all the negatives are front-ended, so you get all the layoffs in the oil patch and things hit hard at the beginning. Then with the lower loonie, though, helps to benefit other provinces and other sectors in the economy, but it takes longer for those to appear and to emerge. So you end up in this transition process where the negatives are front-ended, the positives take time to come out, and we're still working our way through this, which is why we're still getting a lot of choppy data announcements out of Canada. We'll see what we get this week. But I did want to note, though, overall, the loonie has been showing signs of turning around, and not just against the U.S., but against other currencies. So CAD US dollar, which is the 77-cent dollar we talk about in the Canadian media, has started to break out from a downtrend. Flipping this over and looking at US dollar CAD, the more popularly traded pair. And by the way, we're noting here we have clients on a number of bases are still long, but the in terms of top clients in position value on dollar CAD are starting to go short. What does this mean? This means that clients are starting to think that the Canadian dollar has bottomed out, or US dollar CAD has peaked and it's started to turn down. Short positions are building. That means that people think Canadian dollar may continue to strengthen going forward. And with the position size bearish and a moderately bullish number of clients means that people that are playing in size are going bearish. So there's more larger positions on the bearish side, smaller positions on the bullish side. So for dollar CAD, which means that basically that the people that are starting to think the Canadian dollar can strengthen from here and US dollar CAD weaken. So what have we got here? We had a negative divergence here at the top between a higher high in the price, lower high in the RSI, and we've seen it start to work its way back downward over the last month or so. A bit of a bull trap here up above 134. Never really could hold for this 134 level for very long, and now we've slowly started to take out support, taking out the 50-day average, remaining below it, drifting back towards the 200-day average, which is near 126.55. First support here is in and around 128. 15 or so. We've got this here 23% retracement of a previous uptrend in and around 128.90. The 38% retracement down here around 125.55. So there is still some room for this to continue coming off. We'll look at a couple of other pairs as well. I wanted to highlight Sterling CAD here. Look at Sterling CAD. Another one where this going up was Canadian dollar weakening, going down is Canadian dollar strengthening. So we had a huge lift for sterling against the CAD over the last year from about 175 up to 210. But look at this. Head and shoulders top formed now. Left shoulder, head, right shoulder, could not break through 210. We've dropped back under $2 even, kind of bumping up against his new resistance now. We're under the 50-day moving average. That also has emerged as resistance. Look at this downtrend in the RSI, also showing momentum downturn in the pair. So overall, we are though seeing that that CAD looks like it's strengthening, sterling CAD weakening, and we're also seeing this too in the EuroCAD as well. And in the case of the EuroCAD, we can see that it spent much of a year in a rising channel. Big throw over top here, dropped back into it, and now it's starting to break down through the bottom of that channel, indicating a change in trend. Also, again, the RSI falling and slipping under 50 here, showing a downturn in momentum, CAD strengthening, and relative to the euro. The one I did want to show, though, in resource currencies is AUDCAD. AUDCAD's a little bit of a different story here, because in the last year, CAD has actually been strengthening relative to the Australian dollar. Now, Aussie seems to be trying to bottom out here, and the reason is because Aussie dollar got even more depressed than Canada. So in this particular case, it is possible that that we could see the Aussie dollar rebound a bit more because it had been more depressed of late. So that's what I wanted to talk about with relation to Canada. Just something else, a couple of quick highlights here. I'm going to highlight Hong Kong market here because we've been seeing signs of recovery. Look at this, triple bottom. It's broken out of this downtrend. It's broken out of a base. It's been working its way higher, consistently resistance becoming support, and busted this downtrend here in momentum, working its way higher, but approaching overbought here. We have China GDP, China retail sales, China industrial production. That'll tell us, is the China's economy really going off the rails or not? And the market is certainly telling us that people don't seem to think so, that the fears that sent the market plunging back in July, back in August, were probably overblown, and we're starting to see a bit of a recovery here. Let's see if 23,000 holds for the Hang Seng. This Fibonacci here, 23% retracement, sorry, 38% retracement, is around 23,415. And so let's see what happens here. But Chinese markets look to be very active to kick off the week. The final thing I just wanted to highlight here is earnings reports. It's another huge week for earnings numbers. I'll just highlight some of the names. Tuesday we get Yahoo and Canadian Pacific. Wednesday, Boeing, GM, a lot of tech names, Texas Instruments, Citrix. In Canada, Wednesday is a busy day for communications. Rogers, Shaw, Chorus, Post Media. Thursday, we get Google or Alphabet, plus Microsoft, plus Amazon. Outside of tech, we get Caterpillar, 3M, McDonald's. Friday, we get Whirlpool. There's a lot of big names coming out this week in both tech and outside of tech. What we want to watch for this week is how do markets respond to earnings? Are we continuing to see big takedowns on misses? I'll just highlight here the Walmart chart for a second here, and I'm just going to go 1 day and 1 hour. So here's what happened when Walmart put out their profit warning. And this was just one example. Not only did you get a big plunge, but even though it got way oversold, it's kept on going down. And this is something important that we could see play out this week. So we want to keep an eye on earnings and particularly guidance as well, because we are seeing a lot of companies ratchet down guidance. The strong U.S. dollar is really starting to catch up to U.S. companies and their earnings. Their exports have slowed. Their companies with overseas operations are finding that their earnings are getting translated back at a lower rate. So it's also quite significant there on the earnings side as well. We could still see a choppy earnings season, and keep an eye out for anybody that misses badly, because their stocks could get punished. And clearly, as we see from Walmart, even the big names are not immune to this. So a busy week for trading in Canada, busy week for trading in stocks. China markets could also be quite active this week.